Good morning, everybody. Hey, welcome to Friday, April 17th. I hope you've had a good week being good and self-quarantining. Hey, could we possibly put together two good back-to-back weeks? That's the question that we ask ourselves today as we get ready for the end of this week. We did see yesterday, we did manage to eke out a gain pretty much across the board. Looking forward to our discussion with Dave because he always has some little bit of interesting insight as we get ready to start today. Hey, we have seen some increases across the board. Folks, it is a great time right now with the bumps we've seen with the market heading up. It's a great time right now to make sure that your portfolio lines up with your current risk value. We've seen an increase in market values, and hopefully you've gotten some appreciation also. So, hey, it's a great time. Give us a call. Let's schedule a 10 or 15-minute phone call to kind of walk through where you are and see what steps you may need to take given where we are in the marketplace today. And Dave will be with us. I'm excited about our show today as we wind up the week.
And we always check in and see what's going on in the financial markets this time of the day. And we always head down to talk to Phillip Statler from Statler Financial Services. Good morning, Phillip. How you doing today?
Hey, good morning, Dave. Hey, doing well today. I hope you are too. As we finish up this week, could it be, is it possible, Dave, that we could actually end up with two great back-to-back weeks?
Hope springs eternal, I must say. Yesterday ended up being a good day. Dow in the S&P almost looked normal. NASDAQ had kind of a party up 139 points, but it was green ink across the board. And boy, are the futures going crazy this morning. And your read on it, as much as anything, is optimism about the patter on the political front about being able to start phasing and opening for the economy, huh?
Yeah, it is. I think if we look at it, everybody's excited because the president said yesterday that we've got a plan to open the government, open the economy. And I think everybody is on edge and hopeful that that's going to be soon. There's no real true timeline laid out. I think every state, even as it could go down to every county or every town, could all be different. But I think they're just excited the fact that we can finally see maybe an end to this social distancing.
Just being able to see the conversation taking place is rise for some optimism, and that's something that even those of us that are more conservative on the element, probably a good thing. That's optimism on our side of the pond, but we might have some actually macro information out of one of our major trading partners as to exactly how much damage they were doing to ourselves. China put out a bunch of China's economic data is always suspect, but when it's as bad as it was, you start actually believing if they're actually telling the truth, don't you?
You do. Usually you don't put much faith in their numbers, but hey, this time we've got some numbers there to really look at. They talk about their GDP for the quarter. Their first read is a contraction, a negative 6.8%. Which is worse than expected. They expected somewhere between 6 and 6.5% contraction. So not a good thing there. I've got a couple other numbers that they tracked too. The only really good one was industrial production, and not really good, but it fell by 8% instead of the 10% that was expected. Retail sales in China down 19%. They expected it to be down 12.5%, so worse than expected there. And then fixed asset investment down 16%. They expected it to be down about 15%. So their numbers worse than expected in most cases.
Those are basically all holy crud numbers. And when you start looking at an economy the size of mainland China contracting by like 6.8% in one quarter, it's kind of a harbinger of what we're looking at, because you got to keep in mind what we're looking at. The coronavirus crisis in China pretty much encompassed the entire first quarter of this year. So, dag nab, that's the kind of picture we're probably looking at for our economy this past month anyway.
Yeah, it really is, Dave. So when you think about it, it's I haven't looked at my calendar yet to see when our first read is, but that's going to be interesting to see kind of what our first read is on our GDP.
Absolutely, and we only had 1 month of that mess affecting our first quarter gross domestic products, so it ain't pretty. But like I said at the outset, I was not being flip. I mean, Chinese economic numbers we always look at with a grain of salt. The economy grew at 10% last quarter. Yaha, probably, but might have been only 5, but the government decided they were going to say 10. When they start reporting crappy numbers like that, you start wondering, okay, if they always soften the blow, how bad was it really over there?
No, you're right. Hey, the other thing that I did see, we've been talking and we've heard all the rumble about how is China really and truly giving us the correct numbers? We saw Wuhan actually increase their death toll by 50%. Up to 3,869 deaths. If you look at Wuhan as an area, that's a little more than a 7% death rate. And I looked at our numbers here in the United States, and we're below 5%. So and worldwide, actually, it's at like almost 7%, 6 point something percent.
There was a piece that I was reading about the difference between this virus and the H1N1 from back about 10 odd years ago. And the biggest difference is the fact that it can be communicated so easily by a non-symptomatic carrier. Pair it up with the fact that its death rate is considerably higher than the old swine flu virus. Legitimate reason for concern. And if China actually continues to increase their mortality rates, I suspect it'll add a little bit more.
Be down about 15%.
That this was a legitimate accident and not something that the tinfoil hats are saying was an experiment gone wrong.
Well, yeah, you're right. And so we continue to, look at the whole deal. And I'm still, we're seeing the markets increase today, Dave, but I'm still concerned about the ultimate. What does the ultimate look like? What do the people infected? How many more are we going to see? And I think here in Florida, we're kind of behind the curve compared to New Orleans, California, New York, and some of those places.
Now, we're starting out later than the New York-New Jersey corridor did by a long shot. New Orleans and Louisiana is a little bit behind our progress, so we're somewhere in the middle, at least the way I've been reading it. But flattening the curve, you got to remember, flattening the curve is there to decrease the threat of overextending our health care providers. It doesn't necessarily mean that it's going to kill the virus. We want to see the virus go away, but what we want to do, too, is keep the health care resources available to help the people that get hit hard by it. So it's going to be a long slog back to, clean and spiffy like we were.
You're right. It is. And that's kind of the I don't know, fly in the ointment. We don't know what that's going to be, which you would think would bring more uncertainty, which would give the markets more cause to really pause and really wait until they see what it really and truly looks like. Are we getting ahead of ourselves here, or is the market at least getting ahead of itself?
Understood. And the market might be getting a little ahead of itself. Looking at some of the market leaders I got this morning, Live Nation Entertainment is up by like 18% after they canceled just about everything that moves for the next 3 months for their concert business. So, yeah, I think we're looking at a bunch of bottom fishers right now saying, ooh, well, we've already hit bottom and now they're buying. And I'm kind of wondering whether that's wise investing.
Well, I agree with you. And again, we talked about this earlier this week. Is it the traders? And I'm sure that's what it is. It's the computer algorithm saying, hey, buy at this point because it's at this rate. And so I think that's what we're seeing more than anything. But what concerns me is the long-term investors start feeling that FOMO, right, the fear of missing out, and start throwing their money in there when that may not be the best thing to do right now.
Absolutely. Like you and I have been saying, we don't want to sound like nervous Nellies or doom and gloomers, but there's almost always a couple of tests to the bottom. Every time you have a correction or recession or anything else, we've only seen one test. So conservatism is the watchword of the day. Speaking of watchwords, earnings season does continue, and you've got a few household names that are coming in, don't you?
We do. We have Procter and Gamble. They came in. They beat by 4 cents a share. Revenue though came in below what was projected. Organic sales were up about 6% for the quarter. Their full year outlook is they kind of cut that for revenue growth, and so this morning they're basically even right now, Dave. They're down 0.25%.
Okay, can't live without soap.
Well, that's true. I mean, again, that's a consumer staples, and so you would think they would hang in there okay. I have another one that probably people haven't heard of, but I think it's an important one to talk about because it deals with the oil services business, and that's called Schomburg. So they provide services to oil companies in the oil fields, and they beat by a penny a share. The revenue, though, was below what was forecasted, and they slashed their dividend by 75%. So they're taking some defensive measures there. And I guess because of that, they're getting rewarded a little bit this morning. They're up 3.7% this morning after falling a little over 4.5% yesterday.
And when we get to the price of oil, you'll find out why they're responding conservatively this morning.
Exactly. Hey, the last one I have is another financial. We got Regions Financial, Regions Bank. They had a pretty big miss. They missed by somewhere around almost 10 cents a share. Revenue came in below forecast. They, like all the other banks, have had to allocate more to their reserves from 96 million up to 373 million. So a big deal there. But other than that, they're dealing with the other challenges that are out there. They're up, kind of like the rest of the banks were this week, up 2.8% this morning.
Optimism reigns supreme even when the reports aren't all that solid on the financials this time around, right?
Exactly. Yep, seems to be.
So we're looking at a day in which we're following up a green day yesterday. And like you said off the top of this report, Phillip, if we keep this going, we may have another really barn burner of a week on the indexes. 45 minutes before we start trading, where are we going so far?
So we are increasing significantly today, Dave. The Dow's up a little, almost 2.9% to $676 up. The S&P 500 is up almost 2.5%, $68. The Nasdaq's trailing behind, but it had a great day yesterday. It's up 1.6% right now, about $142. So everything's coming up green. And if we can keep that up, it'll be a great week for the second week in a row. We got the commodities, gold, silver, crude, all heading down this morning. Silver's down 1.1%. Gold's down 0.7%. And Dave, man, this is the first time I really looked at crude oil today. Crude oil is down almost 10% this morning. I think this is the lowest number I've seen that I can remember. Crude oil right now is at $17.88 a barrel. Could we see gas below $1, Dave?
I don't know, but that sure looks like a slice of the 70s to me when I look at prices that low on crude oil. And that kind of explains, like I said, why your oil services company was being real conservative on staffing, right?
Exactly. So that's a big deal. I can't remember oil being down that low in quite a while.
No, like I said, that feels like a slice of the 70s to me. Overseas markets, everything's green based on our futures. Japan and Hong Kong and the Chinese markets all closed up at the end of the day. And the European markets are trading up midway through their day as well. Phillip, we've been talking about it, even on a good day, being conservative in times like this makes real good sense. How do I get that advice from you?
Then give us a call at 863-382-0037. Hey, we can schedule a 15-minute phone call. We can do a Zoom meeting. But I think it's important that folks get an idea of what their financial risk is in their current portfolio. So they can follow us on Facebook, Statler Financial Services, where we post this. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings. I'm going to be interested, Dave, because I'm actually live streaming right now on Facebook. It's going to be interesting to see how this kind of flows through today.
Absolutely. And I look forward to finding out the report myself. I'll see you on Monday. Fair enough?
All right, buddy. You have a great weekend, and I'll see you then.
Thank you, Phillip. A blessed weekend to you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.